If I gave you $1 million today and asked you to invest it in just one property, what would you buy? A house or a commercial property? Would that be a retail, warehouse, medical center, mixed property? Most people don't have an answer to that. They'll probably end up buying a property that's in a metro suburb, blue chip suburb that does not even grow by 2% a year. And that's really because they feel more comfortable than actually making the right decision what their portfolio needs. So let me tell you actually the difference between the residential and commercial. So after all, let's talk commercial first. Bigger buildings, higher rental income, and longer leases. And of course, that means it sounds like a smarter investment, isn't it? It is. But here's what is more interesting. Some of the Australia's most successful property investors build their wealth almost entirely through residential property, and nothing is wrong with that. But in 2026, what's a smarter way to do things? So, who is actually making better decisions? Today, we are going to settle one of the biggest debates in Australian real estate: commercial versus residential property. But instead of opinions, I'm going to actually come straight at this and give you a better understanding of what it means. We're going to compare them across 5 different aspects. Number 1, capital growth. Number 2, rental income. Number 3, risk. Number 4, finance. Number 5, and finally, this is the big one, which is going to be which investment actually suits you. So it comes down to tailoring it to you. By the end of this video, you'll have a much clearer idea of where your money could work the hardest. Hi everyone, this is Anubhav from Find My Real Estate, and let me take you through these 5 different aspects very quickly. Every week I speak to Australians who want to invest in property, which is great, but most people don't take action. And no matter whether they're buying their first investment or expanding their existing portfolio, people are stuck at this point because they don't have enough borrowing. So one question always comes up when they're actually asking whether they have the borrowing or not. Should I invest in residential or commercial? The problem is, if you search this online, you'll find 2 completely different answers, different views, and when you ask your friends and family, most people have not even done commercial, but they are ready to give you advice and their expert view on exactly what commercial looks like. And that only creates more fear than actual fundamentals. So let me tell you that commercial is for serious people who are looking to build wealth but also cash flow at the same time, yet it's not for everyone. The answer is not very simple when you look at whether it's residential or commercial. It all depends on your risk appetite, but because the investment isn't one of the highest rental yield or the biggest building, and it's not about the lowest purchase price, it's about aligning with your financial goals. And I'm not a financial planner, that's a disclaimer, but what you need to ask yourself, what does my portfolio need today? Do I need more cash flow or do I need growth, or both? And that is a starting point before you even go down the path of knowing what are the 20 different strategies that can be delivered. So let's talk about capital growth first, because most people want that. Let's start with the question that almost every investor cares about. Which property is more likely to grow in value over time? Imagine 2 investors talking through this. Let's take an example of Sarah buying a residential investment property in a well-located suburb with a gross yield of 3%, because that's the blue chip suburb that she's aware of. Now let's talk about David, who wants to buy a commercial retail with a fantastic net rental yield of 6% plus. Fast forward 15 years, who made more money? That's a question. Now most people immediately look at rental income and they think that might be what's making more money. Or most people who have never done commercial before and only build their portfolio in residential would say it's the residential. No one is right or wrong. The point is, what happened during those 15 years? How closely did they look at the investment that is actually growing in value and the equity that is being built along the way, and how the equity gets built in commercial versus residential is also completely different. Purchasing another property coming from the equity can happen both from residential and commercial, but historically, quality residential properties in Australia has delivered long-term capital growth, which is why people feel more comfortable, particularly in locations with increasing population, limited housing supply, improving infrastructure, and strong demand. That's one of the reasons that many investors actually begin with residential property. And because they may have owned their home at some point in time, they go down that usual path of buying more properties in the same way. It worked in the past because you could keep borrowing money, you could get the benefit of negative gearing. But now, what's the option? Brand new properties, land and house package? Absolutely. But where is the cash flow? that is sitting in commercial. Let me tell you one thing, commercial is the new residential going forward with rules changed. In commercial property, you can generate income from the very get-go, the day you settle. The tenants on the longer leases, they pay the outgoings. You are only counting in cash in the right area, and that type of property also grows well in the markets because your rental yields are going up. In the residential housing, it's all about timing. Buy a property for 500k, wait for 10 years hoping for it to grow, and that's what you're actually banking on and paying negative gearing for all these years. But in commercial, you've got cash flow to start off with at the very beginning, and over those 10 years period, as rents go up, the value of the property also goes up and adjusted to inflation. So mind you, the way commercial works is very different to residential. Secondly, it's a different kettle of fish. What you need to understand is the rental income. And let's be honest, income in today's time is more important with rising cost of living and exactly what needs to be delivered. Cash flow matters. It is the king right now with rising costs and interest rates, where people are struggling to even meet their ends. So how do we make this whole thing more attractive and bring commercial in your portfolio? Commercial property often delivers higher rental yields than residential investments. As I said, net 6% in the case of David versus Sarah, who's buying it at gross yield of 4% a residential property. Contributing towards the outgoing, the lease structure, everything is documented, so you are protected. You've got a business as your tenant in commercial, which means they are going to be there for a while before you even look at it. No maintenance, they manage that for you. You are sitting back and just waiting for invoices. I have a property in my portfolio with 5 tenants on that property, 3 residential and 2 commercial tenants, all within the same building. I only look at my invoices that come through. Of course, there's some maintenance. The maintenance is all about shrubbing the trees and cutting the trees off, and that's about it. Sometimes maybe there's a toilet leak just because it's residential. If that happened at the commercial property, it's the tenant who's actually fixing that. And I can clearly see that in the same building how the outgoings come to me for residential, and when it comes to commercial, I've got no complaints at all because they are the ones who are fixing it. So I can clearly compare that in the same property itself. Therefore, a lot of people don't want headaches with old properties. In commercial, even if it is old, it's not your headache. You're looking at the opportunity where this becomes a real deal for you, but your fears are holding you back. So you really need to understand that I'm going to get comfortable, I'm going to get myself educated where I get comfortable with a commercial property that's going to give me an outcome. So if you don't know what you're doing, talk to us and we can help you. We can evaluate your risk and we can tell you how you can make money and tailor it down to whether you should buy commercial right now or residential.